With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then channelchek truly is the orchard. The listed companies support channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by channelchek and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on channelchek. Today's interview features Engine Media, NASDAQ ticker symbol GAME. Noble Senior Research Analyst Michael Kupinski interviews Engine Media's CEO Lou Schwartz and Executive Chairman Tom Rogers. Visit channelchek.com or click the link in the description for Noble's research on Engine Media, as well as news and advanced market data. And now, here's Michael, Lou, and Tom.
Thank you. I'm Michael Kupinski, the Director of Research at Noble Capital Markets, as well as the Media and Entertainment Analyst. And I would like to welcome Tom Rogers, the Chairman of Engine Media, and Lou Schwartz, the CEO. The nature of this C-suite interview is to get to know the management and the company. And Engine Media has been formed by a series of acquisitions that may seem a little confusing to investors. And my hope in this interview is to clear the air from the fog of those acquisitions and to outline the company's growth strategy and attractive opportunities. To start, both of you have amazing backgrounds, a management team, and a board that is outsized for this company at this time, in my view. First, let's start with you, Tom. You were the president of CEO of TiVo. You served as the chairman and CEO of Prime Media and was the president of NBC Cable, where you founded CNBC and MSNBC. And not surprising, you were inducted to the Broadcast Hall of Fame and the Cable Hall of Fame, and even won an Emmy for development of advanced television. So obviously, you're not a person to rest on your laurels. What drew you to Frankly and WinView Games, both companies which I know you're a part of, Engine Media? And I was wondering if you can also talk a little bit about the board and how meaningful that is to the company.
Well, we are really proud of our board of directors. For a company of our size, we think we have an absolute blue ribbon board of directors. Hank Ratner, the longtime CEO of Madison Square Garden, who has sat atop all kinds of sports interests and is hugely well connected in that space. Larry Rakowski, our head of our audit committee of the board, former CFO of Prime Media, of Warnaco, of Petco, senior financial executive at both Disney and NBC. Lori Conkling, who is in charge of driving YouTube TV forward for Google, is hugely connected in the TV and film space and represents Google's interests as it relates to those areas. And Rudy Klein Thomas, who is known for not only investor venture and sports investing, but also started the Player Summit, which is a really unique gathering of investors and athletes who come together to talk about and identify the best growth areas in the sporting space. And that combination of directors working with Lou and I think gives our company a unique experience and depth to add to the luster of the businesses that we have under Engine's roof.
And Lou, your background spans the telecommunications and entertainment industries as well, with notable stint at WWE as the Chief Digital Officer. Can you give us a little bit more color on your background and what you find exciting at Engine Media?
Thanks, Michael. Appreciate you having us here today. So I started my career in technology back in 2000 with a company called sort of Multicast. We pioneered internet delivered media and watched sort of the industry evolve right through a period where folks had no sort of appreciation for how the internet sort of would grow to scale to support high fidelity video content. I sold that business 10 years sort of later and had an opportunity to continue to monitor and participate in an industry that it has continued to sort of evolve, first direct to consumer, and then more recently, with the unbundling of the cable package and watching, content owners go direct to consumer. What was really interesting about sort of this merger of three businesses was the opportunity to take advantage of adjacent sort of markets. I was the CEO of Frankly prior to consummating this three-way merger with Torque Esports as the acquirer and the other private entity, WinView. And we watched through Frankly the local media industry recognize the importance of digital, and then later the consolidation of local media within the United States, and also how the entertainment side of the local broadcast space was lost to the aggregators like Netflix and Hulu and Roku, and how the local media industry needed to sort of reinvent themselves, taking into consideration, their principal sort of IP was local news and sports, and bringing together, these three entities allows us, to take advantage of a couple of interesting sort of macro themes. One is obviously the growth sort of video games and the distribution of those video games to a multitude of live platforms, Twitch, Facebook, sort of YouTube, and the growing audience against those mediums. And at the same time, having technology to be able to engage those audiences that are consuming not only sports, but also sort of esports on those platforms. So we see two really big themes here: the growth of video gaming, which is a 2.5 billion person addressable market sort of globally. But on the other side of the equation, we also see a very big market for the audience that's consuming video content as a source of entertainment. This is a 600 or 700 million person market. When you add that, to traditional sports, our ability to support competitive video gaming, our ability to engage end users in a more meaningful way, we see sort of Engine taking advantage of some really interesting macro themes.
And Lou, you touched on this. Engine Media is comprised of two segments: the media segment and then its esports and iGaming segment. And each segment has attractive growth opportunities, but on the surface, they don't seem to be complementary to each other. And Lou, I was wondering, given your background, you seem uniquely qualified to help span the divide and integrate Engine's media's businesses with its esports and iGaming businesses. And I was wondering if you can talk a little bit more about what you see in the media segment supporting your esports and iGaming segment.
So the way we segment sort of the business units is by our gaming assets and then our media assets. Our media assets consist of, Frankly, Stream Hatchet, which is a data platform that's integrated into all the major streaming platforms, 18+ platforms. We gather billions of data records, and then we compile that information and make it available to some of the largest game publishers in the industry. The third asset within the media segment is a company that we recently acquired called Sidekick. And Sidekick gives us a depth of knowledge in and around influencers, understanding sort of the power of influencers. We see influencers as the next generation of media publishers, and being able to slice and dice the demographic sort of data around a specific influencer, what age group they reach, how brand safe they are, how engaged their social circle is really sort of an important element to finding greater relevance among the advertisers that within our sort of media segment we're accustomed to dealing with. Our asset, the other asset that's interesting is Frankly contributed a series of major media relationships, folks like Newsweek and Vice, and in the radio space, Cumulus and 500+ radio stations. In the aggregate, we touch probably close to 100 million users, and we help those media companies monetize programmatically their ad inventory. Having sort of the reach of those media properties and having the ability to leverage a team of experts in the programmatic space that have helped these large media companies monetize their inventory, are now sort of being leveraged to monetize ad inventory.
Let me interject a minute, Lou, just to really briefly get to the heart of Michael's question, which is, how do these pieces come together? We offer differentiated gaming experiences in both sports and esports. And we offer the data, analytics, advertising, marketing, and IP to support those gaming experiences. But we also sell those related services in data, analytics, advertising, marketing, and IP to others. So we have a collection of 6 businesses, as Lou was saying, 3 key media solutions businesses, 3 key gaming businesses, and they come together in a way that the media and gaming worlds are coming together. Netflix, that probably the best example of this most recently, saying, hey, we're the kings of streaming media, but we know how much time people are spending when it comes to gaming. Average person over 50 spends 6.5 hours a day on video media, and the average person under 30 spends about 2.5 hours a day, while the rest of that time is spent on gaming and social media. So we know those 2 worlds are growing together, and we've put together a company where the 2 create a flywheel effect of how they support each other. So that's the essential ingredients of what Engine is. There are ways you can invest in gaming. There are ways you can invest in media. Investing in a combination of assets which support each other, which are both gaming and media, is not so easy to come by. And we think we can uniquely occupy scale in that space.
Tom, I think that was very instructive. I was wondering if we can just peel back the onion then on the media segment. And Lou, you talked a little bit about the Sidekick, which seems really exciting to me. I mean, it's I was wondering if you can maybe go in a little bit more detail on what Sidekick does for our viewers who may not be familiar with you know, the influencer marketing and social media marketing. Was wondering if you can go in a little bit more detail about that.
Right. Yeah, absolutely. So listen, Sidekick is a very powerful company. One, from a B2B perspective, we enable agencies and brands and CPG companies and other sort of affiliate marketers, right, to reach a very integral sales channel, right, through this platform, this discovery platform, being able to find an influencer that meets a particular sort of brand objective, or a CPG company that's looking for an individual that has the social makeup that maps, right, to their particular conversion sort of metrics, is really sort of an important sort of element in the media landscape. So agencies, brands, affiliate marketers find real value in the workflows and software that Sidekick sort of has developed. Similarly, we as a direct-to-consumer sort of business see a lot of value in the whole influencer chain, and being able to identify the right sort of influencers that can bring sort of their social following along in some of these social gaming experiences, whether it's sports or esports, is a real value proposition for us that we think is unmatched sort of in the industry. It's very as you know, the biggest direct cost in audience acquisition for sports betting platforms. We believe that the whole social channel gives us sort of an efficient point of acquisition for audience to our direct-to-consumer initiatives.
Let me just expand on that a minute, because I think, Michael, the combination of Sidekick and Stream Hatchet together may be as big an opportunity as any that we have in front of us. Sidekick, as Lou says, measures influencers in the social media world. Think TikTok, Twitter, Facebook, Instagram, and it measures their resonance, their realm of influence within those worlds. Stream Hatchet, which has gotten an enormous amount of traction as the player that is most relied on by the big publishers in the gaming industry to really give a read on a number of things, but very importantly, the impact of live streaming influencers, a different influencer community, particularly as it comes to the gaming space, where those publishers are obviously interested in who resonates most among influencers when it comes to their specific games. But when you combine what Sidekick measures in the social media world and what Stream Hatchet measures in the live streaming world, you have basically a 360-degree input of data and analytics on influencers broadly that can put together the influencer mosaic for any brand which needs to figure out the best way for influencer marketing to drive their company forward. Now, influencer marketing is becoming as probably the fastest growing piece of the digital marketing equation. Recent announcement between Shopify and TikTok shows how influencer marketing is going to a whole nother level with social commerce, and how social influencer content creators are going to be a huge basis for how goods get sold going forward, beyond what we've become accustomed to by way of other forms of advertising and marketing on the internet. Our ability to have a SaaS-based data and analytics business around that, coupled with what we see with Sidekick, beginning to take pieces of the revenue stream that can be developed from this kind of marketing, not just our data and selling it, but participating in the revenue stream of the underlying brands that is being developed here, or their marketing budgets, could be an enormous opportunity for us to exploit. So this is a really big one for us.
Totally makes sense. You know, even growing up and following traditional media like radio, they've always said that it was the DJs, whenever they got on the air and mentioned a particular product, that there was really a big sales increase because people trusted the DJs. And I would imagine it's very similar to what you would see in the influencer market. I think there's a great growth potential there. And so let's pivot a little bit and talk a little bit about the esports and iGaming segment. Obviously, that's comprised of Eden Games, which is a game developer and publisher, and then of course you have UMG, which is a subscription-based website that creates and markets gaming tournaments. But then you have WinView. Was just wondering if maybe we can address this on how you would like to. We can either peel back the onion and talk about these individually, or if you want to just talk about what you see in terms of the esports and iGaming segment for the company. Lou, do you want to start there, and we could follow up the time?
Well, let me just jump in on. We have three different gaming businesses. WinView, which is about how viewers of traditional sports can participate in a social gaming experience where they compete against other viewers for their sports expertise and how well they know, based on that expertise, how a game is going to play out. And it is very different than sportsbook betting. It's not gambling against the house. It is an opportunity to win cash because it has entry fees, and those pools of entry fees get distributed among the winners of a game, which tends to be 1/4 of a football game or 1/4 of a basketball game. And people either playing among their friends and family or playing in a room anonymously get questions, kind of Jeopardy style, where you put forward points based on how well you think you may know the answer to how things are going to play out. Very much structured as a game of skill, very much not sports betting. But we think sports betting is an incredibly competitive space with all kinds of players in it. What we provide by way of viewer enhancement of a broadcast experience for a social game that gives you the ability to play against others, to test your sports IQ and still win cash, covers a lot of opportunity beyond where sports betting is. Two, in WinView, we have this unique patent portfolio of 80 patents, which not only give us a moat of sorts around our cash game of skill sports broadcast social gaming. But as you've seen with the actions we filed against DraftKings and FanDuel, we believe it will give us a role in terms of revenues coming out of the sports betting business as well. Our second business, UMG, otherwise known as Ultimate Multi-Party Gaming, is another kind of differentiated gaming experience, this time in esports. And it allows competitors in esports to play against each other. And this could be buddies looking for a pickup game to compete in a video game, all the way up to major tournaments that we run for the Microsofts of the world or Tencent's, Riot's, major publishers who look to us to do the full soup to nuts of administering a tournament, broadcasting it, providing the color commentary, and moving it out into content areas, publishing esports content where actually, frankly, can sell advertising around it from the esports content affiliates that it represents in programmatic advertising. Then our third business, as you mentioned, is Eden Games. And this is a differentiated niche in that it is the lead player in mobile motorsports, car racing video games, has a long legacy history here, produces the most popular mobile sports video game. Eden Games space have major relationships like EA around the F1 game. Also, Eden has its own IP creative content called Geared Club that we think can be developed into a major franchise in itself. And it just hit the 1 million mark in terms of retail sales on that franchise, which is something which really shows just how much traction it has as a player in motorsports. And why motorsports is so interesting for us is that as a company that straddles both sports gaming and esports gaming, there is no franchise area in gaming that more straddles sports and esports than motor racing. It is equally appealing to the NASCAR crowd as it is to the video gaming crowd. There's something about sports racing in video form, game form, that is highly appealing to both avenues there.
Gotcha. And Tom, would you say that WinView obviously would offer, given the opportunity there, do you think that that offers the biggest revenue growth potential for this segment?
Well, it certainly has the potential for being the biggest market in terms of sports television viewers. A lot of people are going after sports betting, and the media side of the sports world needs a new form of revenue. We all know that the cable satellite bundle is dwindling. Audiences for sports have been declining. Advertising revenue as a result is going to follow. And it needs a new revenue source because sports rights costs are only growing by leaps and bounds. And so that sports television viewer has to be engaged in a different way. And many will be engaged by sports betting. But what we have our eye on is seasonal fantasy sports, which engaged at its height 60 million people who were registered with some kind of fantasy football or other sports fantasy league, enjoying the engagement factor of the social element of gamifying their sports fandom. And what we found is that there are a lot of people who want to be engaged in sports television in a different way than sports betting may involve. And we think these social games of skill that allow people in the moment to have that kind of social interaction around live television is something that will be highly appealing and will be a sector of revenues that the sports media world is going to have to engage to make up for the decline in so much of their existing traditional sports revenues.
I think your background in television here is really, really helpful because, as you said, even live sports are seeing a decline in audience levels, and it's like you said, this could be a way to re-engage and engage in the programming that's being shown. Do you think that as we see WinView kind of roll out, are you concentrating on more football do you think, how do you see migrating to other types of, sports, including baseball or maybe or basketball? How do you see this evolving?
Well, we've done football, basketball, baseball, hockey, tennis, golf, soccer, UFC, boxing. Any sport involves viewers playing in their head since the beginning of sports television, which is what's always made sports different than news or entertainment. It's always been a social experience. Fathers watching with sons, buddies watching with each other, talking back and forth about what's going to happen next, who's going to hit, who's going to get knocked out in the next round. And what we've provided is a tangible platform for what's an intuitive, behavioral, social television experience, and a way for people to both expand viewership and for the opportunity to win cash. Obviously, the most highly televised sports provide the biggest market, but we don't really see a sport where you can't apply this to. And quite frankly, you can apply it to esports. Esports has, as Lou was saying, there's massive hundreds of millions of viewers through Twitch, through Facebook gaming, through YouTube gaming around the planet. And they're gamers watching other gamers play, and they're texting away and they're tweeting away, but they don't have a game as gamers to play, participating in the viewing experience they're seeing of their favorite gamers playing in a competition and their predictions as to how it's going to play out. So we see a real opportunity through, at first, the Twitch extension we built, and then other opportunities to apply WinView to esports. And the patent portfolio I mentioned is applicable to that as well.
And Tom, I want to go back to the patent portfolio. You indicated you have like 80 patents and so forth, and you already highlighted that there is a suit against DraftKings. And I don't want to discuss the merits of that, but I was just wondering, your experience at TiVo, I think, may have teed up the opportunities here, because TiVo had a large number of patents and you went and aggressively protected those. How similar do you see the patents like at TiVo versus what you see in Engine Media and the opportunities to capitalize on the patents that you have?
Well, as you mentioned, we also at TiVo had a deep intellectual property base, and we were very successful in enforcing it against the likes of AT&T and Verizon and Google and Dish and others. And it's something that I think you need to make sure you have the right team in terms of your ability to drive that enforcement. The team we used when we were pursuing that at TiVo is the same team and incredibly successful patent lawyer that we have at Engine running this initiative for us. We will continue to evaluate the best ways to enforce our IP. Obviously, FanDuel and DraftKings is out there as suits that have been filed. I think that we believe that we have differentiated gaming experiences and highly differentiated IP, and the combination there is a real opportunity for investors to think of just a couple of the multiple paths that we have for value creation here.
And the idea with these suits would be to be the toll keeper for sports betting, if that comes, if you happen to win the lawsuits.
Well, that's one phrase, I guess. Look, we believe that these, when it comes to a number of the things these patents do, but very importantly, to have games of integrity where you need synchronization because you have different viewers or players, bettors, who are receiving content through different devices at different times, solving for the integrity issues, the cheating issues that presents is just vital to any cash-based sports betting, cash games of skill that are operating business as well. And we think that IP will play a fundamental role in particularly one of the most important pieces of the development of sports betting, which is in-play betting. That is betting on individual plays and developments in the game, much more complicated than betting on the outcome of games, which is where sports betting has generally been in the past. So we think this is a major contribution that our IIP makes to what will be a very valuable part of the sports betting market.
And so I'm going to turn to Lou. There appears to be a lot of growth opportunities at InGen, and how do you balance the capital allocation for your revenue growth investment among all of the growth-oriented businesses that you have? And I would assume that WinView has some very large upside in your view, and I was wondering, is it possible you can dial back investment spending if revenue growth is not there or not as aggressive as you might think? So I'm just wondering if you could give us your thoughts on capital allocation.
Yeah, that's an astute observation. It is a challenge, right? When you're managing 6 sort of discrete sort of businesses, how to sort of manage the capital allocation across sort of the portfolio. But what we've said in the past is, we've got sort of a base of B2B sort of revenue streams, right, across these various businesses. And a large portion of our investment sort of going forward is driving our direct-to-consumer initiatives, right? Whether it's WinView or whether it's UMG, we think that there's big sort of macro sort of tailwinds sort of behind the growth of video gaming and the level of engagement in and around sort of video gaming, as well as sports and sports sort of engagement. And so, those areas of the business, as we all know, require sort of marketing and dollars, spent in order to acquire audience. And so, those areas of the business will get sort of a disproportionate sort of share of our invested capital over the near and midterm. But as you pointed out, we're going to continue to sort of measure, performance, whether our CAC to LTV sort of ratios, are making sense, and whether we got sort of the right sort of modulation between the two. But I would say that area of the business is going to get sort of a lot of attention over sort of the near and midterm, and from a capital allocation, our direct-to-consumer initiatives are clearly, see a greater degree of investment dollars, from InGen.
We like to say we got game because that's our trading symbol, but the reality is we got games. We got multiple paths here to value creation, and that's very different, I think, than our peer companies, which generally have a single path, many of them solely advertising based. And when we look at the multiplicity of our revenue streams, from direct to consumer fees, to B2B services, to SaaS services, to advertising, to marketing budgets, to IP, there are many ways that we can create value here. And as we assess which of those opportunities look like they have the greatest shareholder return, we can certainly adjust which ones we fund more aggressively than others, which I think is a real strength of the company, particularly since this is not a bunch of products and services, for the most part, that are starting out. They already have traction with major industry players and major brand name clients that in and of themselves become calling cards to grow those revenue streams further, given the nature of the big name companies that are already a part of our company. So I think that's an enormous strength we have that is not recognized. And it all goes back to what you asked at the beginning, which is, okay, that's great, but do the pieces fit together? And what Lou said at the outset, which is that the advertising, marketing, data, analytics, and IP not only support our own businesses and drive the growth of our our various gaming experiences, but we have the ability to sell those same services to others, to participate in the broader wave of development of the industry as we sell those services beyond our own internal use. That internal use gives us obviously some real efficiency and productivity that I believe others don't have by virtue of not having those resources internally. But the fact that we can participate in the growth of other people's businesses by virtue of selling those outside our own realm, I think is a real strength as well.
You know, it has to be frustrating to see all of this revenue opportunity, diversified revenue opportunity, virtually every one of the lines of businesses you're in having a great market opportunity for growth, and yet the stock price hasn't really reflected that. What are your thoughts in terms of the reasons why the stock hasn't gained traction with investors, and what do you think are the key catalysts that people should watch for that maybe help drive the stock at this point?
You're the first one to have the foresight and prescience to write an analyst report since we've uplisted to NASDAQ, and I think we're kind of a hidden story that is just beginning to be told and understood, and we're beginning to talk to NASDAQ type investors since we uplisted over the last couple months. And I think as people read third-party analyst insight into what we are, why we're different, why we have these multiple paths to value creation, why we have these diversified revenue streams, why we are not playing copycat to others in the gaming sectors, but with these differentiated experiences, I think that we should see a multiple expansion well beyond where we are today. And we are well below our peers, though almost all of our peers have less revenue than we do and far less opportunity for driving value creation given the number of businesses we have.
It's amazing that your stock is trading at like an enterprise value to revenue almost 5 times lower than the industry averages, which is quite significant. Do you think that people are looking, you know, you have a very sizable cash position here, and it appears to be sufficient to fund the company's growth. Is the idea here to kind of, you know, invest in these properties, really show the growth, obviously be, you know, have a little bit more of a profile here? But how do you see the cash burn? How do you anticipate that, you know, having this large cash position will fuel growth? What are your thoughts about, you know, as you look into 2022, 2023, in terms of funding growth and that sort of thing?
Well, our cash position, I think, declined quarter over quarter from what when we released our last financials by about $1.5 million, and I think we showed, as you said, substantial cash on the balance sheet. And we want to be opportunistic about making sure that we are being aggressive about developing these businesses, and always want to make sure that we have the resources to do that. So raising cash when it makes sense to do so is something we constantly evaluate. I think that you know, we recognize that being a cash flow negative company is one where you want to never have investors think that you don't have the ability to fully execute on your plans. And I think, you know, we've been pretty responsible about how we've raised cash in the past, and I think we'll continue to keep our eye on when is the right time to be able to continue to do that.
And I think that's an important point, because I think the stock more than discounts the prospect of any equity raise in the future, given the fact that it's trading at such a big discount relative to your peers. Like I said, I think your peers are trading at about 5.7 times enterprise value to revenue, and you're trading at 1. So I think people are, if that's the concern, they're obviously more than discounting, I think, that prospect. I think that's all the questions that I have for today, and I greatly appreciate the time that you have. In closing, I'd like to thank Tom and Lou for their time today. And I recently, as they mentioned, picked up coverage of Engine Media. The stock symbol is GAME, GAME. And I encourage you to go on channelchek.com for my report, which provides more detail on the company. With that, thank you, gentlemen, for joining me today. Appreciate it.
Thanks for having us, really.
Thank you for joining us for this C-Suite interview presentation brought to you by channelchek. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and microcap companies listed.